Good afternoon, this is Mike Peterson, the Bear Market Investor with the market update for February 1st, 2011. We're here looking at the S&P500 stock index at 30-minute time frame. We're also going to be looking at the 2-hour, 4-hour, the daily, and the 15-minute time frame, as well as the Volatility Index. Now, with the push that we had to fresh new highs, that invalidates the possibility that, in fact, we did top back there on the 28th of January. That means that probably what has likely happened is this larger wave structure is, in fact, in place, and we still are very, very close to an end, and I will show you why and my reasoning for that very shortly in the larger time frames. But look at the short-term wave structure. We have to modify that, but certainly not the larger wave structure here, putting this as the peak of wave 3 of 5 of C, wave 4 of 5 of C, and then I don't believe that we have yet completed 5 of 5 of C, but we are very close to that. That would suggest that probably within the next couple of weeks we'll see the completion of the rally from the March 2009 lows until now under this current Elliott wave interpretation, which is pretty rock solid. Now, with this push that we had here, looking at this in the 30-minute time frame, this is a pretty clear third wave push. Whether or not we have completed the third wave here or not remains to be seen, but there is certainly a interpretation here that suggests that we had looked at this from or 1 degree too large, and that this is 1 degree smaller than we thought it was. So this would have been the top of a first wave. Second wave, we're working on or have completed the third wave. We'll see a fourth wave followed by a fifth wave to a new high. Now, whether or not we have completed the third subwave here or not remains to be seen. We could have completed just the third subwave, meaning that we'll see a small wave 4, a small wave 5, then the little larger wave 4, followed by the wave 5. Now, this could also be an ending diagonal too. In the end, that remains to be seen. But the market will tell us that that's really not of too terribly large significance at the moment, because the market should reveal itself in the next few days as to what that wave structure should actually look like. Now, wave structure can often be identified by indicators. What we can see here is the MACD histogram as well as the MACD. We saw the top of this small little first wave here, second wave, third wave, and then we're seeing the momentum decrease right here. If in fact we are going to see a small little fourth wave followed by a small little fifth wave, and that we didn't already complete that, we should see this MACD in the 30-minute time frame at least stall out, if not just move a little bit higher before coming back down again. Certainly the RSI is in agreement there, as is the stochastic. Let's go ahead and move out to the 2-hour time frame. And I want to show you this here because this is very, very key. Now, of this larger fifth wave that we're in here, this is very, very key, okay? You use these indicators to confirm wave structure. And what we're seeing pretty clearly here is that we had a small wave 1, wave 2, wave 3, wave 4, and of course we're working on the fifth wave right now to complete the larger fifth wave of C. And we can see that the RSI here was pretty well pegged out, okay, during this entire third wave advance. And oftentimes in third wave advances in the appropriate time frame, you'll see the RSI push above 80. We're seeing that RSI continue to weaken and weaken and weaken, even though we're on new highs. That suggests that we are in the fifth and final wave of this entire push higher. Okay, this probably concluded right here, and the RSI seems to suggest that is the case, that with a reading of 84.98 there, that we did in fact conclude the larger third subwave there, that we had the fourth wave here, and that we're working on that final fifth wave of fifth of C wave at the moment. Now let's go ahead and move into the 4-hour time frame. Again, same divergences in place, whether or not you're looking at the MACD, the stochastic right here, or the RSI. Again, similar right here. We're seeing strong RSI readings here during this third wave advance, and we likewise during the larger third wave advance that we were seeing there, we were seeing very, very strong readings on the RSI. Again, the strength of this rally continues to wane. Now let's go ahead out to the daily time frame, and you'll have to excuse the way these wave labelings continue to move around, because that's just the way this chart works. In the larger picture, we're seeing the same type of thing, very strong readings back here during this third wave push right here, this being the top of this larger first wave of C, second wave of C, third waves of C, fourth wave of C, and fifth wave of C that we are just about concluding here. Again, RSI is showing us the same type of thing here. We're seeing ourselves pretty well pegged out this entire third wave advance here, and we're seeing momentum, or I'm sorry, not momentum, we're seeing the relative strength continue to decline for this fifth and final wave of C. Now let's go ahead and jump into the 15-minute time frame. I want to show you the wave structure up close here. Again, we can see that on the RSI, we can see that on the MACD histogram, stochastic being pretty well pegged out here during this third wave advance. Now, again, as you can see right here, what I can't really tell is of this small third wave push that we've had here, this being the first of third, second of third, possibly the third of third right there, or the third of third. Whether or not we have completed this third wave, we could have a small pullback like we had right there in this second wave, then have a little fifth wave push followed by another pullback. Now, what is going to be interesting to see is whether we get any wave overlap. Okay, if this is in fact the top of the first wave and that we had, or are in process of completing the third wave right here, which would be the third of fifth of C, whether or not that fourth wave is going to overlap the peak that we had right here. If we actually do get wave overlap, that suggests that we are in fact in an Elliott wave ending diagonal pattern, which is of course a terminal pattern. But it's really of no significance, because whether or not we get a strong pullback or not, we are pretty close to a peak. All of our indicators are showing us the same thing. It's just a matter of the discrepancy here in the short term of how we look at this smaller wave structure here in this smaller fifth wave push. It certainly looked like it could have been completed back there, but with the fact that we did not break this fourth wave low, that would suggest that after we did exceed this as well, that we are not yet done, and this would then mean that as far as Elliott wave is concerned, that this would have to be a third wave. So higher highs to be seen sometime in the very near future, but we're probably going to see a pullback here soon in order to finally get that higher high put on. It may not be much higher. If this is in fact an Elliott wave ending diagonal, we could, after we've put in this third wave right here, see a fourth wave that does have overlap, and then finally put in a fifth wave, perhaps somewhere in that 1312 to 1315 area, just slightly above where we did here, but it certainly could move higher. As far as right now too, we also do have these boundaries in place. It may not be necessarily what you would consider an ideal broadening top formation, but it really doesn't matter that much. I mean, we're still looking at the same resistance and support levels, and you can see that the market is pretty much been respecting those boundaries at the moment. I don't know that we're looking for a push up past that upper boundary right here of the broadening formation to these higher levels. That could certainly happen in a fifth and final wave, but I think, like I said, as I was showing you in the the larger time frames, that we are very, very close to a top. Now looking at the daily time frame here, the volatility index, for the newer viewers, I want to just draw your attention to the lines here in blue. This is actually the Fibonacci fan. This is not something that you'll see many other technicians here use, and I am showing exactly how it is used here in the volatility index, and you can see as well as I can that the market has responded to those levels. What I drew here is this. This is the 38.2% retracement in the Fibonacci fan, 61.8%, and the 78.6%. This 78.6% directly lines up with the longer term declining area of resistance in the market, going all the way back to the 2008 panic in the stock market through the April panic that we had into May and into now. And what we can see is we just finally had a breakout of that. We had that false breakout back here. We had a false breakout there. Came back below ascending support a couple times actually. But finally, to surge through that, we back tested it again. We had that surge right there. And that's where we are today. Now, this is hopefully the type of unique chart work that brings you back to me here on YouTube, because I don't think anybody else has this type of chart here, and I do this type of stuff very often, whether it's in the S&P 500 stock index or anywhere else. I can come up with some pretty unique things as far as technical analysis that hopefully you won't find anywhere else. And seeing as this is free, I hope you're getting your money's worth. Now, after we had that bullish candlestick there in the volatility index, what I was expecting was that very next day, coinciding with a bounce in the S&P 500, we were going to see weakness in the VIX. Usually when you get these type of candlesticks, you see that. We did in fact see that. However, what we weren't sure of is whether the market was going to move higher than its prior peak, and it did in fact do that. So it gapped down, coinciding with a gap up in the S&P 500, and continued on to lower levels. Now, whether or not we, do see a little bit of waffling around here for a couple of days, we could even make it back as far as this ascending area of support before that surge in volatility takes place, allowing us to complete the fifth and final wave in the S&P 500. So let's wait and see what happens, but that's what I got my eye on right now. And we are expecting that surge in volatility, probably find a resistance at this level before coming up to that 78.6%, and then we'll have to see what happens. Have a nice night.